Hey everybody, good afternoon. It's breakout back lunch, and today we have a backtesting paper trading session. Like I mentioned in the previous video, I was not planning on taking any trades in a prop firm or with real money. I just wanted to use this session to do a bit of practice and reflection to figure out what works and what doesn't work. I set my paper account balance to $50,000 to mimic what it would be like to trade with a 50K sim account on a prop firm. And as you can see, I had a quote unquote profit of $776.50. This was based on 3 trades that I'm going to review. I would say it looks like my patience really paid off in this session. It might be just because I'm paper trading, but it really felt like I had a strategy that works, and for the most part, the session played out in my favor. You could ignore these 2 cells up here. This was just from yesterday. I was playing around. I'm going to go over the 2 trades that I took on ES and the 1 trade that I took on gold and my takeaways from those trades. You start with ES. I took a break and retest trade here. Now, just going back and referring to some lessons that I learned in my previous videos, I did not take a trade on the retest of this 1 minute candle here. I waited for price to move well below the low of the 5 minute opening range, and I just waited for a retest here. Now once you got this retest, I waited for bearish price action to come in, which was this candle here. And once you got this bearish retest, I was in for a short trade. As you can see, there was a lot of back and forth at first, and I'm not gonna lie, I did really want to exit my shorts here, but my stop loss was right around here. I was basically using the Fibonacci retracement tool to figure out a good stop loss. My thought process was, well, if we get a bullish candle, if we set the Fibonacci retracement tool from the high of the open of the session to the low, if we get a bullish close above the 61.8% range, so over a 60% retracement, then that would be a good time to exit a short trade. We did not get that. We retested this level 1, 2, 3, 4, 5 times with 1 minute candles, but eventually price fell over and I was able to exit at a great profit. The second trade I took was here. I have this green rectangle here to represent a demand level. I'm going to release a separate video on my supply and demand identification, but just imagine that this is a demand level. In other words, this is where you would expect to see buyers step in and move the price upward, even if only momentarily or for a short period of time. We did get a bullish reaction at first, but then we went straight back down. I think this is an issue on my end. I really should have waited. I keep saying that. This was the last trade I took for the day, and maybe I was just too excited. I just wasn't thinking through this properly. The issue is we had this really bullish candle, then we had this bearish candle following it. Just trying to think of if there would have been a way to avoid this. in the future. Probably would have been better to wait for like a break and a retest of this demand zone. That would have been a safer and a higher probability trade. Also, probably wouldn't be good to act aggressively at around 10:45 ish, around almost 11, which is when momentum in the market starts to slow. I'm gonna keep that in mind in the future. Exit here. I was up about $1,200. This trade brought me down to $776.50 in profit, which is still good, but I'm going to be more selective when taking these types of trades. Just like how I was pretty selective with the break and retest. Selective and patient. Those are two qualities that every trader should have. The other interesting thing I want to mention is that we have this supply zone that I marked in red. I didn't take a trade based on this supply zone, but notice here how we had this big wick. If you go to the 15-minute chart, this was, well, my method of finding supply and demand doesn't really depend on the wicks, but you can see how this could be an area where there will be a lot of selling pressure. We got this retest of the supply zone early in the morning, and then we had a rejection from it. I normally don't trade outside of market hours, like 9:30 a.m. to 4 p.m. However, this is interesting, and had I been looking at this earlier in the day, I would have made a great profit. So I'm not looking to make any changes to my trading schedule now, but that's something to keep in mind. This is also kind of good news because it shows me that this method I have of identifying supply and demand is actually working. All right, now I'm going to switch over to gold. I just took one trade. Okay, here I took another break and retest trade. So we had this break of the 5-minute opening range. Then we had a nice retest. This time you can see that there's a bullish reaction right at the high of the 5-minute opening range, and because of that I decided to take an entry here. This entry turned out to be a little premature. Price got all the way back down to inside the opening range, almost to the midpoint. We had a nice bounce up, and then price eventually hit my price target here. I didn't extend this rectangular color, but this is also a supply zone that I identified in my analysis. Once I saw that being hit, I took my profits and secured another $700 or so of fake money. Yay! But seriously, it is good to know that the strategy that I've been working on appears to be consistent. This is just one day, of course. However, if I can trade like this on a prop firm account, then shouldn't have any issues passing in a couple tries. One thing I want to note is that in both the gold trade and the SPY trade, where we were using the Fibonacci retracements, price usually traced back to the 50% zone, close to the 61.8% zone for gold, and past the 61.8% area for yes. I might want to adjust so that I'm taking trades in that area rather than at the high of the opening range, but it has to be context dependent. Same thing with the ES trade. If you think about how really we were in a downtrend this entire time, I mean, you can still have nice bounces during a downtrend. So it can still be viable to trade a bullish bounce from a demand zone when you have a downtrend. It's just a little bit riskier. I'll have to keep that in mind when trading in the future. Alright, that's all I have for today. I'm going to come out with some more backtesting videos. I'm going to do one more day of backtesting tomorrow, and depending on how things go tomorrow, I will start another Top Step Combine on Friday. Otherwise, as always, if you have any suggestions or ideas, comments, please let me know, and enjoy the rest of your day. Bye.